To share insights on the outlook for energy minerals, our next guest is from CRU Group, from the Battery Materials Desk. CRU is a leading global business intelligence consultancy. Would you please welcome Senior Consultant Toby Green.
Great. Okay, thank you to Simon and Jordan for some great talks on gold. I'm going to take us in a bit of a different direction now. And I think I'm going to cover about four minerals very, very quickly, and then we're going to hear quite a lot more from the speakers after me. I think we've got Northern Minerals, Montezuma, and FY Resources, so a lot of good coverage. Okay, so CRU is about 300 analysts and consultants around the globe. We've got 11 offices. We like to stay very close to the markets that we do cover, and we like to pride ourselves on being small enough to deliver a personalized service while being large enough to actually cover everything in the detail that our clients are looking for. And I think a few people have probably seen me talk before on battery minerals. I'll just do a very convoluted overview here. Obviously, we don't take consensus. We do all of our own analysis. So the modeling in the top left gets quite complex when you start getting down to something like an EV demand model. You do have to take into account all of the policy and the technology, as well as a lot of macro factors. In the top right, that modern art there kind of represents how people do transport themselves from place to place. So it takes a look at sort of the distances and the congestion and a variety of cultural factors. In the bottom left, it's just an overview of the sort of technological developments in the lithium-ion battery. And in the bottom right, the total cost of operating, which is how we forecast when the growth in demand for electric vehicles versus the traditional ICE. This is really just an overview. If you are interested in that, do come and see me, and I can send you some longer slides on each of these. But today, I'm going to take us through some of the big names, the big hitters in the battery metal space. We've got lithium, nickel sulphate, natural graphite, and high-purity alumina. The last one, really a growing sector, one that I don't think many people in the room will have a huge amount of familiarity with, so looking forward to hearing more about that later as well. So lithium, as has been very broadly published, it's got a huge growth story of the lithium-ion battery. 325% supply coming online, 319% demand growth. So it's fairly well balanced at the moment, and it will be fairly well balanced again in 2025. The problem, I suppose, is that in the middle, it gets a little bit out of balance. And that's why we see the prices coming down quite a bit between 2018 and 2025, but it does start to turn up again at the end. Periods of oversupply up to 13% in 1 year. The Australia dominant supplier at the moment, it's got about a 40% market share in lithium, and it's going to keep that market share out to 2025. China is growing very fast. It's got spodumene resources. It's also got some high magnesium brines that they're trying to figure out. And we do see that the growth in China is going to be quite significant. It probably will overtake Chile across this period. Although it will be interesting to see how quickly SQM ramp up now that Corfo have given them permission to do so. Lithium carbonate, still the primary intermediate, but hydroxide is gaining ground. There's a 9% increase in the processing capacity for hydroxide, which hydroxides tend to go into sort of the higher purity NMCs. And timely processing capacity investment, again, we've talked about this in the past, but there are stockpiles being developed at the moment where people are mining this stuff out of the ground quickly enough, and we are not processing it into the battery-ready materials quickly enough. We will see that probably come down fairly soon, but it is responsible for a large amount of those spikes, especially on the hydroxide side. Some interesting recent news on lithium. We have Albemarle saying that they're being pressed for 10-year contracts for security of supply. Very recently, SQM came out and said an extra 10 billion needs to be invested in the supply side in order to match the demand over the coming decade. And just a fun fact, I was talking to one of the analysts yesterday, and he was telling me that a Chinese group has discovered a way to take a waste product from the wine industry, the grape seeds, and combine it with the end-of-life battery industry in order to recover 99% of the lithium and 92% of the cobalt from these batteries due to the catechins acting as a reductant. So it's just quite nice when our industry overlaps with the wine industry, I find. Nickel sulfate. I will talk a little bit longer about this one. This is an interesting market at the moment. Nickel, for anyone who's been following it for a long time, they will say it's pretty much as bad as it gets at the moment. It hit $9,000 a ton a couple of years back, and it hasn't recovered a huge amount since. And a lot of people are missing a little bit of this story, which is that the reason the price is so depressed is what gets known as class 2 nickel, the ferronickel and the nickel pig iron that goes into the stainless industry, just flooded out of Indonesia and Chinese supply as well, and depressed the nickel market. But in the class 1 side, which is the side that gets turned into nickel sulfate, gets turned into briquettes and cathodes, there hasn't been a huge amount of growth recently. So on the left-hand side, we can see batteries, which are the red part of the histogram. These are growing at a very rapid rate. So by 2035, they'll be about 30% of the total nickel demand. And that's a huge growth. This is not a small market by any stretch. So 12% by 2025. The amount of nickel units in ferronickel and NPI, strong supply. But on this right-hand side, if you look at that red line, that is the class 1 nickel production from 2000 out to 2030. It's practically flat. We have a series of depletions of older nickel copper sulfide mines, and not a huge number of them coming back online. So the actual class 1 production has got a flat profile, whereas that blue line, that is the class 1 demand. Now, where it gets interesting is we can see out to 2022 at the moment with our current forecasts. If we flatline that, by 2029, we've got a deficit of class 1 nickel. And this is a growth story that the battery story does not end at 2030. It takes off around 2030. So it's just one for everyone to try to bear in the back of their minds, how is that actually developing? Are we bringing on enough class 1 nickel? Now, when we talk about class 1 nickel, there is a good amount of growth within that in the nickel sulfide area, which is the part that's going into the NMC and NCA precursors. However, and just talking to those, I mean, Australia is bringing quite a lot online. I think BHP is responsible for some of that. We have China growing quite significantly, South Korea, and Belgium, Umicore, all bringing on some nickel sulfide production. But when we talk about how that is produced, the cheapest form by far to get to nickel sulfate is to take a copper nickel sulfide existing mine, a brownfield project, and expand it. New projects, significantly more expensive, but once we start moving to laterite and HPAL, quite a lot of variation in terms of how you operate your HPAL plant, but they can quite easily be the most expensive way to bring nickel sulfate to the market. So whereas all of the blue area on the right, this is the class 2 production, on the left-hand side, we have more and more of our nickel sulfate is going to start coming from laterite and HPAL, and the price bar at the moment is floating around that nickel sulfide, copper nickel sulfide brownfield and NPI Indonesia kind of price. So what does this do for prices? Well, it's going to tend towards the marginal cost of production, and with the hydrometallurgical HPAL laterite nickel sulfate production, you could quite clearly see the prices tending towards $20,000. So there's an entirely new price floor for nickel coming, which feeds into our price prediction on the right. That's the LME prices, 2010 to 2022. I think it hit sort of 16,000 on the right of that and is continuing to trend up. And the last piece I just wanted to talk about on nickel sulfate was the concept that this market might actually divide into a class 1 price and a class 2 price. So much the same way that thermal coal and metallurgical coal divided all those years ago. I mean, most of the news that comes out around nickel sulfate demand is very good news. Everyone is trying to design the cobalt out of their battery cathodes, and their replacement is invariably to increase the amount of nickel consumption. With the cobalt price spikes that have occurred, most of the news is surprising in terms of the amount of R&D spend and the speed at which these new chemistries are coming online. Tesla announced, I think earlier this week, that the new NCA cathode chemistry has vastly reduced its cobalt content at the expense of more nickel. LG Chem planning to move to NCMA by 2020. People thought it would be 2022 at the earliest. And NCM 811 cathodes now in mass production for e-buses in SK Innovation, targeting EV usage by August. They're coming on a lot quicker. The demand profile is going faster and faster. Natural graphite, a very underreported market and a very interesting one. It is, in our most recent forecast, it is expected to have a slight surplus in the short term, which will be eroded as the battery storage takes off further. And the prices that have gone up recently are likely to flatten. But all of that being said, there's a huge possibility of graphite prices surprising to the upside. And the main reason for that is the Tanzanian regulatory frameworks. So Tanzania effectively have been trying to rebalance the profit sharing with Barrick Gold, and this has had quite a disastrous set of unintended consequences for the graphite industry. Tanzania are very, very rich in graphite. Some of the more advanced and profitable graphite projects have been identified there, and they're struggling to keep their investment alive with the very punitive measures from the government. The expanded graphite story, we haven't heard a huge amount of development here. A lot of people and a lot of projects have been talking expanded graphite as a possible major growth area. And well, we hope it materializes, but nothing huge has been noted yet. High purity alumina, the hot topic of the moment. A lot of interest in high purity alumina has suddenly come through. It's the eye of the car companies turns from time to time, and it's landed at the moment on HPA. Typically, it's been used in LEDs and sapphire glass. It's a huge growth story. That green part of the bar on the left-hand side shows how much is going to go into the lithium-ion battery separator market. And we'll see later on, it's got the highest impact out to 2025 of any of these commodities because it's quite a small market. The demand quality is for a sort of high purity 4N. There's quite a lot of competition in China at the lower end, which has driven down those prices. And at the moment, the prices are expected to be languishing near the long-term lows, although they have risen about 15% from that recently. Still at a very low level, just due to the level of competition in the sub-49 category in China. So I just wanted to pull together and just show some of our results of our forecasting. EVs, this is not a particularly new slide. We see 42 million when you include hybrids, fuel cells, and the plug-in hybrids as well. You do see a huge amount of growth taking off in China. It'll be interesting to see whether they go with more of a pure EV or hybrid strategy, but it's very much a story that is taking off. Just because I've seen another version of this before, I wanted to see how CRU's analysis stacked up. We see out to 2025 the most affected commodity is lithium. It's quite a small market and obviously goes into every lithium-ion battery designed. HPA, the close second, another small market that's going to be greatly impacted by the lithium-ion battery story. Cobalt does seem quite small, but it has already been very heavily impacted, and the thrifting that is occurring is stopping it from being entirely overwhelmed, but it is already about, I think, 25% of all the demand for cobalt, and it's going to grow an extra 40%. Nickel, as we talked about, is a very large growth story as a result of the reverse thrifting. And finally, just to talk a little bit about the consolidation around China in the battery story. 75% of all of the precursor materials are currently being produced in China, and 100% of the spherical graphite is being produced in China. There is a huge amount of appetite out there for companies that want to work in the midstream or the upper midstream and reduce that country exposure to the Chinese region. So if there's anybody here who is thinking of a downstream play, it would be interesting to follow. Thank you very much. Appreciate your time.